Hello, everyone. Welcome to Switch Markets Live. I'm Shane Vernier, market analyst and head trading coach over at howtotrade.com. I want to welcome everybody to our live stream here, and this is sort of the infancy and the beginning of our Switch Markets community. We're going to talk a little bit more about that in just a second, but what we're going to do today, I will take any questions at all that you have and just submit them in the live chat there on YouTube. Also, I have a few questions that I get a lot, and we're going to conduct a complete market scan. We're going to look at mortgage rates. We're going to look at really a shifting dynamic here in the U.S. markets right now. Just looking at my tote board, it's sort of blood red. I mean, the Dow's down big, S&P 500 and holding on a little bit. The NASDAQ is actually broken positive, and what we're starting to see in 2025 is it is the time, and it is really the land of confusion. We don't know what's going to happen, when it's going to happen. We don't know when Trump's going to speak. We don't know when he's not going to speak. And right now, there's two things we got to think about: monetary policy and the trade war, the tariffs, potential recession. So actually, that's three things I lied to you. So I want to welcome everybody to the live stream. Our goal here over time is to build an interactive trading experience where you can ask me questions, where you can interact with yourselves. Some of that platform and tech's going to be coming our way on the Switch Markets, on the switchmarkets.com platform itself and user. Really, the idea is to increase your user experience. We want you involved. We want you asking questions. If you're having trouble with your trading, ask questions. If you're doing very well, share why you're doing very well. And all that is going to be at your fingertips here relatively soon. So we are just getting started here with the Switch community, and I want to welcome everybody here. Also, we have some friends joining us from How to Trade, and I want to say a big shout out to them as well. They've been with me for a long time, and it's been a great road. I've been doing this live stream stuff since 2021, been in the market since 2011. We have a lot of experience to draw off of, and we can definitely help you get accomplished whatever you want to get accomplished. Now, a couple of rules on my streams. Number one, if it makes money, it's the right answer. I don't care what your methodology is. If you're making money every day, you're in the right. Number two, if I don't know something, I'm not going to sit here and BS you. I'm not going to make up a big yarn. We try to be realistic here. If you're looking for something that's pie in the sky, you want the Lamborghinis, you want the airplanes, you want all that stuff, YouTube's full of it. Go find it. Go find one of those videos. We are actionable traders. We trade in the real world. We have our expectations grounded in reality, and we attack the markets every day from a position of strength. That's the goal. So I want everybody to leave these streams really feeling empowered, and I want everybody to feel like they're a part of a community. I've been a day trader a long time, an intraday trader a long time, and I can tell you the number one thing that really hurts traders over the long run is fatigue. And a lot of that fatigue comes from being isolated and going hard every single day, day in and day out. So we're looking to build a community here. We really want to make sure that everybody feels like they're a part of something. And when you're in the markets, you really are a part of something. You're going against the best and the brightest. You're also pursuing your own personal goals in a realm where the possibilities are limitless. And I really believe that. That's why I'm still here. If I didn't believe it, I would have moved on. I would have went back to work in construction, or I would have gone into some other field. You know what I mean? So Welcome. All right, let's get on with the show here. I definitely wanted to really stress community because that's going to be a big part of what we talk about here moving forward with our Switch Markets series, which is only going to expand. We're putting out the newsletter weekly. If you're not getting the newsletter, then be sure to contact our live support team. If you're a Switch Markets client, you get that free. That should be emailed out to your inbox, and we always love to hear feedback. So anytime you can give us some feedback, that would be absolutely fantastic. So welcome. Bring your ambition into focus. That's what we talk about here at Switch, and it's definitely a good motto. Okay, we're going to start off with a few fundamentals, and then we're going to dive right into the technicals because I see the U.S. dollar, Japanese yen. That's going to be a pretty good place to start. As you can see, this is our calendar for week 21. Really an interesting week. Monday was relatively quiet. Tuesday, RBA slashed interest rates, put a lot of pressure on the Fed. It is up to the Fed now to act. We're going to talk about that in a little bit. Wednesday, EIA crude oil inventories. I'm going to break down the state of crude oil for you here in just a second. And then also a Thursday, weekly jobless claims, existing home sales. Friday, new home sales. So those are going to be your market movers for Thursday, Friday. Definitely keep an eye on the U.S. real estate market. There's going to be headlines. They're going to be throwing around that dreaded R word, which is recession, and everybody's wondering, are we going into one? Tuesday, Wednesday, Thursday, psychology. It's all systems go. Our primary objective is to hit our weekly P&L, aggressively trade our plan. We do that by cashing in on opportunity. If our trading plan says trade it, we trade it. That's it. That's it. Listen, now is the time to trade. Maximum liquidity, great market depth. Tuesday, Wednesday, Thursday, that's when I go pedal to the metal, and we try to make a little bit of money. Riding momentum, we're looking for profits. We want to build the account. That's our game plan. So Monday, we're thinking about how to attack the week. Tuesday, Wednesday, Thursday, we're going hard. And then Friday, we're putting half of that money in our pocket, and we're getting ready for the weekend. That's my own personal psychology. You don't have to follow it if you don't like. But for me, Tuesday, Wednesday, Thursday, hammer time. It's pedal to the metal. It's time to trade. So definitely beware. Be ready for that. Okay, I want to start off. I got a question here, and I've got a nice trade update that I want to go over here on the dollar, the dollar yen really came into view, gave us a great trade. These are ideas that go out over on howtotrade.com. So let's go ahead and engage. Thibelo, you're going to have to just pardon me with the names right away. My name's Shane Vernier. It's an American name. It's relatively simple, but some of your names are absolutely fantastic. I'm just not very good at pronunciation. So if I don't get your name right, don't hold it against me. I'm learning. Come back. I'll get your name. Believe me, I'll get it right. In any case, Thibelo, there's any reason to trade this week? Because right now I'm only focusing on the Euro-USD pair today. I miss a big move, which I've been waiting the whole day yesterday, but I'm patient about another move. Well, we're going to talk about the U.S. dollar right now. The dollar you're off about 0.5%. Euro-USD, I'll pull that chart here in just a second. Actually, let's just go ahead and pull it right now. Let's go ahead and start off. I'll show you exactly what I was looking at for the Euro-USD. Really some fantastic trading. I was trading Euro-FX futures. That's a story for another time. So what I like to do is use horizontal support and resistance levels, namely Fibonacci retracements. Now, there's all different time frames to use. I'm a big fan of using long-term anchor points. And what a long-term anchor point is when I go to, say, a weekly or a monthly chart, and I actually can sit down and say, okay, where are my key levels? So if I'm looking at the Euro-USD for me, and I use my Fibonacci's, I can see that this is clearly an uptrend. Compression, break, compression, break, now the pullback. So if you're an Elliott wave practitioner, that's probably going to be your 1. That would be your 2-wave count. That's a 3. That's a 4, 5. 1 3s and 5s move. If you don't know what I just said, don't worry. It's not a problem. What we can do right now is I can tell you, okay, we're bullish. I think we can all recognize that we've got a big green candle here, up about 1.5% on the week. That's a bullish market move in the Euro-USD. So if I was going to analyze this chart for you, this is what I would have done. We actually had a trade idea out last week that we were buying down there at 110.54. It's right at the back end of my golden zone. 62% retracement. Love it. My favorites are 38 and 62. Love them. Those are my favorites, and I also love to trade 78%. So to answer your question, is there any reason to trade this week? Yeah, there is a reason to trade this week. If you were still focused on this Euro-USD pair, what could we actually be looking to do? We saw the big pullback over a month. Now we've got a big bullish week. I want to buy it. So if I'm looking at 112.50-ish as being fantastic downside support, that would be my optimal trade location. Unfortunately, it's about 100 pips away. So I'm not necessarily going to get that. So what do? We just start bringing down. We just start bringing down our time frame. So here's our daily chart. Work a quick Fibonacci. something like that, 112.75-ish. Not bad. How about an intraday time frame? Let's go to a 4-hour chart. I absolutely love the 4-hour chart on the Forex. $113. You can start to see what I'm getting at here. Right now, the U.S. dollar, the DXY is in a free fall. We're off about a 0.5%. We're back beneath 100 even. That's going to be a real challenge. That's going to be a real challenge for traders to get that dollar back up over 100. That tells us what? It tells us that our bullish bias here in the Euro USD is probably warranted. I absolutely love this trade to the long side. The real question is do we get the pullback? So to answer your question, Tabello, is there any reason to trade? Absolutely. I'm looking for pullbacks in the Euro USD. If, in fact, we see a little bit of pricing disequilibrium, then we step in and we trade it, and we trade it hard. So I definitely think that this is a great week to be in the markets. That's for sure. So we're going to do a trade follow-up now. This is one that we put out on how to trade. I hope that helps you on the Euro USD. Let's see right here. Jorfin Donald. He speaks only English. I'm sorry. That's my native language here. I'm up in small town Dillon, Montana. About all I speak is English, and I don't even do that very well most of the time. So you'll have to bear with me. I'm sorry, but we're working on some AI. Maybe we'll get some AI tools that can put me out there in several different languages. But yeah, all I do is really speak English. So great question, though. Sorry about that. I wish I was bi or trilingual, but I just am not. I speak one language, but I do know charts pretty well. All right. Japanese GDP contracts, support in view for the U.S. dollar, Japanese yen. This was a trade idea that we put out on how to trade not too long ago. And let's get right out to price action. You can see that we came off in a big, big way here over the past several days. Now, nice downtrend. You'll notice our highlighted circle was the back end of our golden zone, 144.75-ish. That was an area of robust support. We're going to go down to a short time frame and show you that we got the bounce. But look what happened here. The last 2 days have been incredibly negative here in this dollar yen. Why do you think that is? Because the dollar's slipping. We just looked at the Euro USD on the rally. Dollar yen's coming down. What does that mean? It means that the USD is getting crushed across the board. And that's definitely a challenge here for traders to try to price in, okay, if the USD goes down, what does that mean to stocks? What does that mean to commodities? We'll get to all that in just a second. But this is a pretty interesting entry there. Came off to 78%. If we go down to a 4-hour chart, you can see exactly what's happening. We got an absolutely beautiful entry right in here. Boom, boom. Nice rally. Nice, beautiful 45 pips. Remember, guys, you do not have to pick the market direction to make money. All you got to do is find some decent levels or find a strategy and just keep those risk versus rewards sort of conservative, and then get in there and just sort of look for the friction. Look for the buyers and the sellers. Take the money out when it's available. It's an easy game, right? That was a great trade. I really enjoyed executing that one. 78% is now in play. Now, the only reason I pulled this chart up, aside from our trading review, is this one right here, 78%. 143.70 is huge. If that level doesn't hold, more than likely we're going much, much lower. Now, on the other hand, if you're trading the dollar yen and you're a channel trader, I know a lot of you trade channels. Look at this daily channel. Absolutely beautiful daily channel. You can see today's low really sort of holding this pattern just beautifully, this downside support pattern on that lower trend line. So a lot of folks say, Shane, how do you trade channels? And I go, it's real simple. You're just waiting either for a break out or up. Personally, I like the upside of these channels to trade reversals. So what we'll be looking for is some more bars, maybe some more daily bars. If in fact we get a daily close right in there, that'll be a signal that maybe the market's reversing. So keep an eye on this. Keep an eye on this daily channel here in the dollar yen. It's very, very important that we understand market structure and exactly what we can do with it. These things occur in markets every single day. And I know I'm looking at daily and weekly charts. A lot of times when we trade intraday, we forget about the macro state of the markets. We forget about what it actually means to be in the market for a given period of time and also what the market's doing. Your number one job as a trader is know when a market's trending and when it's flat. If it's flat, you have to trade it a certain way. When it's trending, you have to trade it a certain way. There's no two ways around that. So if, in fact, you're going to trade this dollar yen, we just talked about the importance down there of that 143.70 level, my horizontal support zone. What if I wanted to play a reverse here? What if I'm saying, okay, when's the bottom of this market in? Am I going to have a chance maybe to play on the dollar getting a bit of a retracement here? Well, I mean, there's lots of things we could do. This channel would be one of them. Very basic. What's a channel? That's when you have really a series of price bars trading within a given range. Remember, your channels don't have to be perfect. You can bring them in. You can do really whatever you want, make them as narrow or as wide as you want. What I'm interested in is getting the majority of these bodies inside of the channel. Don't ignore the lower wicks, but just understand where the value area is, where price is. For me right now, I'm waiting to see the dollar sort of make a bit of a comeback. And if, in fact, we get a bar close maybe up outside of that daily channel, that may be a signal to take a shot to the long. Maybe a signal. We'll see. We'll definitely see. But I'm definitely watching the yen. For me, the yen's in play in a big, big way. All right, one other thing that we do on these live streams, it's a rule. I don't run from losers. I absolutely don't run from losing trade ideas. I refuse. We're transparent here. Believe me, in Switch, the trade ideas aren't going to be overly important. I want to take more of your questions and analyze the market from your perspective, but I do sort of want to sample some of the strategies that we have out there. If you're looking for a strategy, the How to Trade Calm YouTube channel is a great place to find one. We've got a bunch of them out there. This was a 920 strategy that we put out, and we've already got it coded in TradingView and everything, and you'll see right there our gold candle is going to be a buy, and I had a buy right there, 920 EMA crossover. The 9 crosses over the 20, we're going long, and right there it is. You can see what's happening here. We are losing. This is why it's absolutely important, absolutely critical. It's crucial that you have your stop loss down. Understand where your stop loss needs to be. We know that. We know where our risk is. We know where our reward is. Remember, every trade has 3 parts. 3 parts. Number 1, it's got an entry. Number 2, it's got an exit. Number 3, it's got a stop loss. Our take profit, we were shooting for 142.50. Doesn't look like we're going to get it. Coming down against us, we know where we have to bail on this trade, and it's somewhere down around 137.40. So we're not necessarily out of the trade just yet, but watching the dollar flounder as it is, we've got a lot of reasons for that. We're going to go over them in a second, but as long as you understand that, hey, there's a problem with this trade, but I know where to get out at, you've really already won the battle. Understand where to take your losses and where to take your wins. You could be in this game a long, long time. A long, long time. And I would love to hear exactly how you guys are trading and some of the things that you're doing out there, because there's a million ways to trade. And the thing that makes it all go, that makes you successful as a trader, is going to be, well, your risk management. That's all it's about. It's money management, guys. Don't lose it all on one trade. You can't. There's an old saying in American football, you can't win the game in the first quarter, but you can darn sure lose it. Conservative, risk-averse. We're looking for sweet setups. What I mean by sweets, premium setups, and then we get in and we execute. And if we can do that, then we have an opportunity to be long-term profitable. That's what everybody wants to do. All right, let's get out to Wall Street and see what's going on right here. You can see CNBC, not really my favorite news outlet. It's just free. And if, in fact, it's free, that's probably the best price out there. And you can see Dow drops more than 300 points. Yields, Treasury yields are the big story today. And one of the reasons why they're the big story today is because we have a shifting view of U.S. monetary policy. But you can see all the news today basically is negative. I mean, it really is. It's mostly negative, and we got to be ready for that type of coverage given the current political environment here in the United States. You're going to see more negative stories than positive stories, and a lot of that's because negative stories get clicks and positive stories don't necessarily get clicks. That really is the reason. US 30-minute chart. This is sort of an orb strategy that we went over yesterday. We had some bad luck on the orb. We had a bad news event that swept us out yesterday, but you can see right here, this is an opening range breakout, 2-candle setup. 2-candle setup, U.S. open. There's your first 30-minute candle. Ding, ding. U.S. 30. There it is. There it is. That's going to be our range. Now, to trade this type of a trade, you're looking for a candle close above the top of your orb or below the bottom of your orb. So our range is absolutely key right now. We're trading sort of in the dead center of our range. We haven't really got a big move at all on that US 30. I think that we're going to have a fantastic trading day. I really do. I could see us getting some legs towards the end of it. But I got to tell you right now, with about, 5 hours left, 5 hours of hard trading left, I don't necessarily have a direction in this market. Even though the US 30 is down, I don't necessarily believe that it's out. I could see it rebounding like the S&P 500 and the NASDAQ have. So if you're trading something like the orb or the opening range breakout, you definitely want to be sort of involved, but you got to wait for this market to move a little bit. Right now, I don't really want to hold shorts. I've watched the S&P 500 and the NASDAQ bounce. Jury's still out on where the US 30 closes for today. As far as what we can really expect for our key news events, not much left on today's calendar. What I will say is during the U.S. pre-market, the MBA 30-year mortgage rates, this is absolutely huge because we're talking about 6.92%. That means we're up week over week. You don't need to know what any of these numbers mean. You don't need to know what any of these numbers mean, but what you do need to understand is that, okay, we're at about 3-month highs with our mortgage rates, and what that means is it means that our interest rate expectations are changing. This is the CME FedWatch Index. Okay? The June meeting, I'll have it for you, FOMC Live. Feel free to join us. I'll tell you where and how. But 18th of June, 94% chance that we're going to hold those interest rates static. How about in July? July, 75% chance. We expected our first interest rate cut out of the United States Federal Reserve in May. We didn't get it. We're not getting it. So if we're not going to get our rate cut, what does that mean to the dollar? Well, it should be strengthening in it, and it's not. Now, the reason why it's not is because we've had some downgrades. Moody's Analytics downgraded the U.S. credit rating. Moody's Analytics downgraded several major banks. Essentially what they're saying is there's a major debt problem. That is really hurting the USD, and we believe that potentially the Fed might hold rates longer to combat the fallout. We don't know. So right now, we're looking at our first rate cut really priced in, and that's only 65.35 in September. In September. That's absolutely huge. What does that do to something like gold? It puts people just in a state of flux. They don't really know. We're watching the dollar fade pretty much every day. Really, I mean, we're off about 0.5%. That's a big move in the DXY. So if, in fact, we come off big in the dollar, what does that do to gold prices? It sends them up. We were in full retracement mode in early May. This was a trade idea that we had out a while back. We pretty much called the bottom of the market here in May, right down there, right around 32.15. Nice, beautiful bounce up to 33. That was a great trade. But right now, what do we do with the gold market? Well, it's hard. It really is hard. There's a couple of things that I would point out. If you're trading gold, always know where 3,500 is. Always know where 3,500 is. You've got to know where 3,500 is. I mean, that is the top of this market right now. That's absolutely huge. The sellers stepped in a big way at 3,500. Do I believe that we're going to go back and retest it? Yes, I do. When does it happen? I don't know. I just don't know. And if I don't know, I'm not going to sit here and tell you, it's going to go to 3,500 this week. If I knew that, I mean, I'd be on a yacht somewhere. My point is this. You really have a fantastic level up there to watch, and it's a really huge key level. We did a lot of work on key levels over at our How to Trade Com YouTube channel. Check it out. There's a video on key levels there where I spell out exactly what they are and what they can do for your trading. This down here is beautiful too. 3,135. That looks to be the intermediate term top and bottom of this market. How do I trade gold right now, though? Well, I have a bullish bias. There's no question about it. You have to. I mean, any technician, market technician, or economist worth of salt looks at that uptrend and says, okay, that's big time. That's a big time uptrend. There's no denying that. What can we do right now, though? Let's take a look at our daily. I always like to step back, take a look at the view from 10,000 feet. Now, you can see that right there is what I call a hard strike of support. That's a beautiful trade, but that's gone. That's over. What do we do now? Well, there's a couple of things we can look to do. Number one, you probably want to be on the long side of this market. You probably want to be on the long side of this market. I think that that's absolutely imperative that we understand a bullish bias is warranted. What do we do right now, today? Well, a couple of plans. We can go down to a 4-hour chart and look to buy pullbacks. I don't have a problem with that. What I would really stress, and I really would stress this is what I would call a broken chart pattern. Now, some of you know exactly where I'm going with this. Others don't. This right here, and I'm not the best artist in the world, so stick with me, but this right here, this was setting up to be one of these. Cup with handle. That's what was setting up right there. And if I can draw this, okay, that's what was setting up. A cup with handle is a bullish market indicator. It means you have one big top, a pullback, and then a second top, and then an area of compression, and then a break. Textbook cup with handle. What happened? We broke down. What happened? Our handle didn't set up. We broke beneath the neckline. We went down to support. Now we're bouncing up. This cup with handle did not set up. On the daily time frame, I was relatively confident we were going to get that cup with handle, and then we were going to get the clean break back to 3,500. We didn't get it. Now what are we at? Well, we came off a great trade down there. Okay, what do we want to do? I would rather be long, but I also have to respect this wave. This right up here, this high right there was 34.32. This low down here was right around what? Somewhere right around what, 31-ish, 31.20. So I'm working Fibonacci's here, something like that. We're at a huge level right now. 33.15 is absolutely an epic level. If we break above that, the next port of call is going to be about 33.67, and then from there, it'll be a potential rush at 3,500. So for right this minute, I wouldn't be long. I wouldn't be short. I think that if you wanted to go with a tight scalp, which is very difficult to do on spot gold, very difficult to do, something like this off of the current highs, that could be a really good buy down there. Let's go to the 4-hour chart, something like this. This could be absolutely beautiful as well. Spike low, spike high, nice P formation, 32.75. You could probably talk me into a scalp there, maybe for $1. I wouldn't be hanging around for the long term, though. The shorter time frames we get into, the tougher life can get, especially when we get Trump speaking, Treasury Secretary Jay Powell. When we get those folks speaking, we could definitely be running into trouble. So let me see. I got a comment there in the live chat. Fabelo, trading gold is easy. What I hate about gold is the high spread since this week gold is bullish so far. No, really, you're not wrong. I mean, you're absolutely right. This right here, and you look at our spread, our spread on this Forex.com chart. Be sure to reference your own charts for your spreads. But this is just a basic trading view feed. Your spreads are what they are. They're going to vary a little bit broker to broker. But the key with gold is liquidity. You've got to know the liquidity. As long as there's a good market depth there, you can trade it. When the market gets really sparse and thin, that's where we run into issues in the gold market. So it's a great observation. But the spreads on spot gold definitely have me trading gold futures. But I'm in the United States. I don't have access to some of the products that you do. But I will say that spot gold, the spread's big. If you go down to, say, something like a gold futures contract, you just don't have that problem. You've got real tights. I mean, just 0.1. I mean, it's very, very tight, and that's a real nice thing. So right there was a fantastic trade that we had about 8 hours ago or so. I'm still watching that 33.25 level really, really closely today for my own intraday trading. I'll probably be looking at short scalps from up there and just have to dial in an exact entry point. That's really what it's all about. All right, guys. One last market, and then we're going to go ahead and sign off. If you have any questions at all, be sure to ask. I want to say hi to my friends over there at howtotrade.com. I know there's a few of you watching. Remember, it's all about community. It's all about community, and what we're trying to do here is build some camaraderie and some community between traders. And the way that we do that is we make this an interactive experience. You get in there, you ask me questions, you comment, you say, Shane, you don't know what you're talking about. And I said, fine, great. Why? Tell me why. Listen, I'm more than happy to talk any market on any level, whatever you'd like to talk about. And remember, there's only a couple rules on my streams, and one of them is if I don't know the answer, I'm not going to sit here and lie to you. I'm going to tell you exactly the truth and what you need to know. And we try to do that in our newsletter. Remember, newsletter, Switch Markets newsletter. If you're a client, that newsletter is beamed out to your email address. Be sure to check it out. I'm giving you markets to watch. We're looking at the movers and the shakers. We also include a little bit of analysis and maybe some key levels that you need to be aware of going into the trading week. It's a fantastic resource for anybody that's in the market, in my view. All right, everybody, we got one more to go. If you've got the stamina, I've got the stamina. Here we go. WTI crude oil inventory is down. Full disclosure, I'm a crude oil specialist. This is what I do. When we start talking about WTI crude oil, I know the market. Brent crude, I know fairly well. I just don't necessarily trade it as religiously as I do WTI. WTI is an everyday trade for me. I look at the markets. I want to see exactly what's going on. And a big part of our markets, WTI-wise, is understanding the global oil dynamic. I'm going to save you probably about a 4-hour tutorial on all the things you need to know about crude oil. What I will say is that when we're trading crude, you have to know what's coming on Wednesday. Every Wednesday, unless there's a holiday on Monday, you're going to get the EIA crude oil inventories report. Now, what that report tells us is our weekly supply stats out of the United States. We have projections. We have hard numbers. I'm going to show you right now how to read this. Now, this is a weekly petroleum status report from the Energy Information Agency or administration, whatever, here in the United States. This is an official release. This is a summary. Go to EIA.gov. You'll have this, and what you can do is just click on the summary. You don't need to sit there and read through the whole report. It does you absolutely no good unless you're an energy expert or you're writing a column for an energy magazine. All of this is jibber jabber. You don't need to know it. The third paragraph is what you need to know as traders. This is the paragraph you need to know. Third paragraph of the summary, that's it. We're not going to try to confuse. We're not going deep. We're not talking about distillates. We're not talking about anything. We're talking about how much oil came out of the ground and made it to market here in the United States last week. U.S. commercial crude oil inventories, excluding those in the SPR, that's something different, increased by 1.3 million barrels from the previous week at 443.2 million. U.S. crude oil inventories are about 6% below the 5-year average. That means that we don't have much oil. That means we're running a deficit here, and it's not necessarily the best situation. Now, what that does to crude oil prices is during the intraday, it spikes volatility tremendously and can definitely enhance your risk profile. The question is what happens to the market tomorrow and the next day? So when I see that, I say, okay, we're up 1.3, but we're still 6% below. May, going into Memorial Day weekend here in the United States, this is going to be one of the biggest weekends around. Typically, we see bidding hit the market right now this time of year. We're not really seeing it. This is a good look at your U.S. oil CFD. This is going to be your weekly chart, and this will mirror your WTI contract on MT5 and TradingView, on MT5 and MT4. But you can see something like this. Okay, so you've got a little bit of static here at 50%. What we have setting up is very, very interesting. You've got sort of an inverted hammer. I love hammer formations. I love inverted hammers. They're reversal signals, and they're strong. Something like this. It's sort of a long-legged doji, but if we fill in a little bit more negative and close there, that's an inverted hammer, and that suggests that you're going to get some bearish price action. So definitely be aware of what happens later this week, and we've got a long way to go yet. But if I wanted to trade right now, what could I do with it? I'm short side biased. I like the short side of this market. However, we have to respect the seasonality, and we have to respect that we're going into Memorial Day. Something like a 60 3/4, you're going to run into support there. I would be shocked if you don't get some bidders that drive that at least back up to 61-ish. As far as a discount buy, I'm not really too interested in trying to get a position, taking position longs. I don't think that that's the ticket. I think the short side of this market's probably going to be the best, and the reason why is our long-term technicals. Now, pretty much nobody in the energy sphere or in the energy, analysis field is going to show you this chart, and I've showed it to a lot of traders over the years, and not many of them really believe that it's valid, and I'm going to show you why it is. You go, Shane, what are you doing? Fibonacci retracements are my weapon of choice. Whatever yours is great. Negative 40 was the true price of crude oil after the COVID lockdowns. You're looking at April 2020, crude oil went negative, and the reason why, there was no place to put the crude oil. So what do we have? We have a Fibonacci sequence that's been incredibly valid. This support zone right around 64.31. Bang, bang, bang. We hit it repeatedly, and now we've broken it. Guys, this stuff's no accident. And this is how you know when you're drawing your levels, when you're right. Right there, 64.31. We retraced right up there to about 64.14, and now we're coming off. I would be very, very careful being long this market. I think we could easily see this thing fall apart down to maybe 45 or 50. I fully expect that to happen this fall. I just don't necessarily, good luck timing that trade right now in dealing with all of your carry costs and all the fees that it would be to hold shorts that long. That's an expensive trade to make, but something like that, we sit around, we say, Shane, could crude oil actually go to 44? Maybe not. Maybe not. That's a long ways down the queue, but I can tell you exactly where it can go, and I think that you will see 52, something like a 52, 50, 52. I could see that coming. Maybe not right now because it's the heart of bidding season here. Maximum travel season in the Northern Hemisphere. Maximum demand for refined fuels. It really is not going to get any bigger than the time between Memorial Day and the 4th of July here in the United States. That'll be peak oil, and then we'll start to see things ratchet down as the futures traders brace for fall and winter. This is a fascinating market. I have to say, I'm overwhelmingly bearish. However, we're up about 6.5% this month. That's the May bidding coming in. We'll wait and see. As soon as the U.S. production comes fully online, per Trump's directives, this market comes off. That's just the way it is. So there you have it. All right, everybody. I want to thank you for joining me today. We're just now kicking off our Switch Markets community. I want to definitely say hi to our friends over there on howtotrade.com. If you have any questions, be sure to ask during these live streams. There's going to be more and more of these as we move forward. We're looking at all sorts of different things that we can add to the Switch Markets platform that's really going to help us take some of the things that we do at How to Trade and incorporate those into Switch and really build the community of traders that not necessarily, is like a sounding board necessarily, but more of a place where you can go and say, okay, well, there's a live stream going. There's going to be some other traders in there. I'm going to ask some questions, and I'm going to see exactly what we can do with an opportunity here to potentially make myself a better trader and a good trader. Well, let's just put it this way. I'll sign off on this note. My background, I was a collegiate baseball player, and one of my coaches told me, he said, Shane, a great player is a player that makes all the plays that they should make and a few good ones. That's what a great player is. As a trader, you should be thinking the same thing. I need to make all the trades I need to make and then a couple of good trades, and you're a great trader. What does that mean? It means not taking huge losses. It means not scaling in to losing positions. It means not holding on when we know our stop loss has already been taken out. On that dollar CAD trade, as soon as our stop's gone, it's gone. It's just the way it is. If you can get good at that, your first stop's your best loss. Your first loss is your best loss. If you can get good at that, make all the trades you should make and a couple of good ones, keep those losses where they need to be, you're in it for the long haul, and that's what we want here. So welcome to the Switch Markets community. If you have any questions at all, be sure to reach out on the next live stream. You can head over to How to Trade as well, get an account there. It's all free, and then you can just contact me via private message, and I'll get back to you in short order. If you need a strategy, How to Trade Calm YouTube channel, check the strategy out. All right, guys, that's a wrap. I'm going to go ahead and sign off for now. It's always my pleasure being with you. You have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.